Hey guys, and welcome back to my channel. In this week's video, we're going to talk about how it's even possible that Vancouver real estate prices are reaching peak levels of 2022. We're also going to talk about how Canada's banking regulator really hold the key to softening this market and how they might do just that by the end of the year. Real quick before we get started, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. I also make content designed to help you make your move in and around Vancouver. So if that sounds interesting to you and you want to chat with me one-on-one about your real estate situation, you can book me in the Calendly link below. But regardless, subscribe to this channel so you don't miss a future video. All right, so how is it possible that Vancouver real estate prices are increasing when we have interest rates that have increased from 0.25% to 4.75% over the last year and a half or so? The thing to keep in mind with the interest rate increases is less people are affected by it on the mortgage side than you might think. In fact, 30% of mortgage holders have felt the effects so far. Now, in order to fully understand that, you'll need to understand the different types of mortgage products out there. So there are fixed products. So you'll have a fixed rate, for example, and then you'll have a variable product where the rate varies when interest rates go up and down. Now, within that variable rate product, there's an adjustable rate, and an adjustable payment and a fixed payment. Most people on variable rates are on a fixed payment. There are some people like myself, one of my mortgages has an adjustable rate. So a very small percentage of people are on a variable adjustable payment mortgage. And those people are the ones that have felt the increase of interest rates as the rates have gone up. So every time the rate goes up from the Bank of Canada, I get a letter on one of my mortgages saying your payment has gone up. So a very small percentage of people are actually seeing their payments go up. Now, when we look at the fixed payment variable, what has happened is when the interest rates go up, the amount of money, the amount of payment that goes towards interest increases on that type of a product. And it gets to the point, so the payment stays the same, but you get to the point where everything you're paying every single month is fully going towards interest. And at that point, what is supposed to happen is the bank essentially is supposed to call you on that and say, look, you need to increase your payment right now because you're only paying interest. And that is what was supposed to happen in large part at the end of this year and into this year. But what has actually happened with the major lenders, with the major banks, is rather than make those calls and make people increase their payments, they've been extending amortization. So whereas your amortization might have started at 25 years or 30 years, there are mortgages now that are sitting at amortizations of 65, 70, 75 years just to keep the payments stable. So when we circle back to real estate, the household cash flow when it comes to these mortgages, they haven't been changed much. Now, keep in mind, Canadians are taking on more debt load because when it's amortized over a longer period of time, essentially what that means is as a Canadian mortgage holder, you are paying more interest. But because your cash flow isn't changing, your monthly cash flow when it comes to your actual mortgage, you're not feeling the pinch. And hence, you're not really changing a lot of your spending habits. And when you do that, what ultimately ends up happening is inflation continues to rise because we're still spending. We're not feeling that cash flow pinch again for most of us. Now, with these mortgages, when we're going to actually see more of this sort of pain is when a lot of those fixed mortgages are going to come for renewal. And that's in 2025 and 2026. And that's assuming that interest rates and mortgage rates are where they are at right now. If they do decrease by that point, we'll feel less of a pain. But when renewal comes up, that's when the bank is going to come and say, okay, we need to get your amortization back to the 25 or the 30-year mark. So the reason why real estate prices have been able to continue to increase is the new buyer out there, someone who's just purchasing right now, yes, interest rates are up, but the scenario has not changed for them. Mortgage rates are up, but the scenario has not changed. This is not a new normal for them. This is just normal. They're getting approved today. Yes, it's a shocking amount of money for what you're getting, but it's not like their payments have changed because they're getting fresh mortgages. Again, it's a very small percentage of people that are actually feeling that sort of pinch. So each time the Bank of Canada raises rates, mortgage interest is inflationary because the amount of interest that's getting paid is higher, but it's not affecting a lot of pocketbooks. So you can kind of see how that's counterintuitive because, when you look at it, you have the Bank of Canada that has one mandate and they need to fight inflation, and they do that by raising rates. They want people to adjust their discretionary spending. Their thought is if they adjust the rates and mortgage rates go up, people are not going to sell off their properties, but they're going to make other spending decisions when it comes to discretionary type of expenses, and they'll spend less. But with the Bank of Canada, with the government basically encouraging the banks to extend amortizations to help the homeowner, people are not, again, feeling as much of a pinch as the Bank of Canada would hope. It's crazy to think you have these policymakers in very high positions that have opposing priorities, right? Like for the government, they don't want to see rates increase. They carry over $2 trillion in debt. It's not helpful for them for interest rates to increase. And then again, you have the Bank of Canada who needs to increase them and hope that we cut our spending down. And then, like I mentioned off the top, you have the banking regulator who's watching this. They can't be happy that amortizations are getting extended. I have heard that there is some talk out there that they may be pushing on the bank shortly to stop this practice of extending amortizations and waiting until renewals, and in fact encouraging banks to make calls to their mortgage holders and say, look, now is the time we need to get your amortizations in line. If this is to happen by the end of the year or whenever it happens, now homeowners are in a position where they have to make tough decisions because they're going to get a call and their payments may go up 20%, 30%, whatever it might be, depending on what their existing rate is. And this is where I think homeowners will make the decision, especially investors. If they have rental units, they're not getting market rent. I definitely see them placing more units on the market. And as you know, as we've talked about on this channel, if we do see that uptick in supply, it should mellow things out. It'll be able to appease some of the demand that's happening in the market. So that's something to watch for. I think that's one of the only things that's really going to put a damper on this situation or on the market is if we see that additional supply. Now, on the real estate side of things, and specifically on the development side, talking interest rates again, not a great time to have a construction loan. It is a perfect time, however, for developers to be putting proposals in front of cities right now. As I've mentioned on this channel before, the BC Premier has put together their naughty list of, it's now at 37, 40 cities, but they're going to give targets to 10 cities essentially for housing approvals, and those targets are going to come out sometime this summer. And what we're hearing is that they're going to give these municipalities 6 months to show they're making progress. So if you're a developer right now and you have land or you have plans for certain cities that are on this list, now is the time to be putting proposals forth, and that's what we're seeing it in New West right now. We're seeing it in Coquitlam. We're seeing it in the Vancouver area. Developers are smart because they understand that right now is when we have municipalities as motivated as they will ever be to approve new housing, and in that process, they're more likely to offer greater density, more units to the developer. That means more revenue for the developer and able to turn a profit more easily. So I think that's part of the reason we're seeing a lot of large-scale development proposals being put forth right now, with the understanding that the municipalities are under the gun. They are going to be more motivated than ever to approve, to add density. That's going to help them towards their own targets. So again, from a development standpoint, real estate standpoint, great time to be putting projects forward or on the table in front of cities. Not necessarily a great time to be building units. Does that help real estate prices in the short term? Absolutely not. And this is another reason why we're seeing prices keep continuing going up towards the peak levels of last year. I mentioned off the top that a lot of people are on those adjustable payment variables, and I've had a couple investors reach out to me since the last interest rate increase wanting to place their homes on the market. We put one of them on the market in North Van, a condo, marketed it. We got an accepted offer within a week. Lots of activity. So there's lots still happening out there. Essentially what it is, it's a bit of a trifecta because you have people that have pre-approvals locked in. So they have rates locked in for the next 90 or 120 days. So they are motivated to make purchases right now. You do have a portion of the buyers out there that are a little bit more cautious. But then you have sellers looking at the interest rate in the market and they're thinking, did I miss the boat on the spring market? Should I get more aggressive and more motivated? And I think that's helping to keep the market going at a faster pace. And again, why we're seeing prices continue to increase. So there you have it for this week's video, guys. I hope you have a better idea now of who's actually affected by these interest rates, when we're more likely to see the pain in the market and more sellers place units on the market, and also why you're seeing a lot of developers put proposals forth right now. If you enjoyed this video, guys, or you learned something from it, hit the like button, because what that does is it takes the video and it sends it out to more people so they can learn from it as well. And if you enjoy weekly videos on Vancouver real estate, hit the subscribe button so you don't miss a future video. And of course, as always, if you're in the Vancouver area and you want to talk real estate one-on-one with me, you can book me in the Calendly link below, or give me a call, shoot me a text, send me an email, whatever works for you. I'd be happy to chat with you. But outside of that, thank you so much for watching this week's video, and I hope you have a wonderful week.